Hey folks, welcome back to my channel. In today's video I want to discuss a topic around which there seems to be a fair amount of confusion in the credit repair world, and that's the topic of charged off accounts. So I want to talk a little bit about what they are, how they come about, what's the effect, and do you still owe them once they are charged off? We're going to get into all that in the video. Before we do, hi, let me introduce myself. For those of you new to the channel, my name is Earl Bridges. I'm an attorney, a real estate broker, nationally certified credit repair and FICO scoring expert, and author of the book Restore Your Credit and Live the Life of Your Dreams, and owner of the credit repair company Restore Your Credit LLC, based here in lovely New Orleans, Louisiana. Before we begin diving into the topic, I'd appreciate, if you haven't already done so, please subscribe to my channel, and if you find, not only subscribe but also hit the bell notification, so that you'll be alerted whenever there's a new video. This channel is devoted to the subject, pretty much all things credit, personal and business credit. And really the goal here is to kind of give you the credit education that none of us were ever taught in school, but significantly impact all of our lives. So really the hope and the goal is to impart a credit education, and certainly I hope that you'll find these videos and this content helpful. And if you do, then please hit the like button and drop a comment. Comment on the video, or drop a comment about other video topics for videos. I'd love to hear what's on you guys' minds, and of course I will respond to all comments. So let's get into the topic of charged off accounts. So let's start from the beginning, and I'm going to try to keep this video relatively short, below 10 minutes, but we do have a fair amount of ground to cover because this really is an important topic. A charged off account is a credit account on which the original borrower defaulted. And then the creditor, the company that issued the account to the borrower, the debtor, then charges off the account. And I'm sure most people are familiar and aware with, let's say for example, if you open a credit card and you default meaning you don't pay the money back that you owe, then ultimately the owner of that account, the issuer of the credit card, will charge off the account. Typically it happens around the 6-month period. If you've gone 6 consecutive months without making a payment, that's typically going to be about the time that the account gets charged off. Okay, and so one question is why do companies charge off accounts? The answer is, I believe, and this is my understanding, and please, if any of you watching understands it differently, please enlighten all of us. I'm just giving you my understanding, but I'm not going to guarantee that it's correct. But my understanding is that companies charge off accounts after the 6-month period to conform with what's called GAAP, generally accepted accounting principles. And I think from a practical standpoint, they do it because regulatory authorities do not want companies, particularly public companies, well, really exclusively public companies, holding out to the world defaulted accounts as current performing assets. Now, okay, I get it. That's a mouthful. Okay, so let me see if I can kind of simplify it a little bit more. So, if you have a company that, a credit card company, and let's say that they've issued, just pick a round number, $10 million in credit lines out there. So they've got, they've got all of these accounts, and the total credit lines is $10 million. But let's say, so essentially, let's say 10% of those accounts, or let's just say $1 million, are in accounts on which the borrower hasn't made a payment in 6 months or more. Okay. Well, no one, I mean, certainly, regulatory authorities do not want, and even you, let's say you were a shareholder in a credit card company, and they had, $1 million in accounts in which payments hadn't been made in 6 months or more. You certainly wouldn't want them to be able to hold out to the public that those are viable assets, or what's typically called current performing assets. They're not performing because the borrower is not paying. Okay, so really, regulatory authorities do not want these companies to be able to represent these accounts as assets. So, as performing assets. So they get written off to bad debt. Okay, and that's essentially the act of charging it off when it's being written off to bad debt. So when it gets written off, it really kind of goes into like a separate bucket. You've got like performing assets over here, and then you've got non-performing assets over here, and it would go in that non-performing asset boat. So it's not a performing asset. Okay. Does that mean that the borrower no longer is financially responsible for that debt? No. Sorry, folks, it doesn't. And that's where the confusion comes in. I watched a YouTube video recently from a young lady who, the whole topic was about charged off accounts. And basically, the upshot of the video is once the account gets charged off, then you no longer owe it. That is 100% wrong, false. It's just not true. Charging the account off, like I said, is more of an accounting thing more than anything else. It doesn't extinguish the debt. It doesn't extinguish your liability for the debt. You still owe it. Okay? Now, so when it gets charged off, the company who charges it off, in fact, can, and in most cases will take basically a tax write-off, or they will reduce whatever they have charged off to bad debt. They will reduce their income by that amount. So if they made $10 million, but they charged off $1 million in bad debt, then really they only have $9 million then in revenue, because $1 million of that was charged off the bad debt, and they don't have to pay taxes on it. So that's the practical effect for the company. But for you as the borrower, assuming that's what you are, you still owe it. Okay? It doesn't extinguish your liability. And proof positive of that is of a very significant, if not majority, number of charged off accounts gets sold to collection companies. So, for example, Capital One, I guess probably the largest credit card company out there, or maybe American Express is, who knows, but one of the behemoths out there, After they charge an account off, they then will, I believe they sell it to Portfolio Recovery, which is a debt buyer. Well, think of it this way. If the act of charging the account off extinguished the liability, there would be nothing to sell. You can't sell something that doesn't exist. So basically, the point of this other YouTuber was, well, once it's charged off, then the debt no longer exists and you can go on your merry way. Well, that's not true. And proof of that is that if in fact that were the case, then charged off accounts couldn't be sold to debt buyers because there would be nothing to sell. And we all know that that just simply isn't the case. We see it all the time. We see these accounts being sold. So they absolutely, or the act of charging it off does not extinguish the financial responsibility of the borrower. However, it does one thing that can be potentially important in a credit repair world, and it's this. If you have a company that, let's say you have a credit card and you default on it for whatever reason, and the credit card company charges the account off, okay? And then they sell that account, usually for pennies on the dollar, to a collection company, okay? The credit card company still can report that account. They have every right to continue, even though they've charged it off and even though they no longer own it, they can report it for 7 years, up until, I think it's 7 years from, the law allows for accounts to be reported for 7 years from the date of first delinquency. So they can continue to report it for 7 years. But what they can't do is they can't report that account as having a balance because it no longer does to them. Now it does to the collection company. Okay, the collection company who purchased it can and most likely will report it, and they're going to report whatever the balance is that you had with the original creditor. But what the original creditor can't do is report that there is a balance on the account because there is nothing at that point owed to them. That's the good news. The bad news is you can, now you've got a collection company that is that's pursuing you for payment. So unfortunately, as they say, no free lunches in this world, folks. So when you have a charged off account, just be aware of the fact that that when it is charged off, the debt isn't extinguished. The only question is who do you owe it to? Do you owe it to the original company who you had the account with, or do you owe it to a collection company who purchased it? And you'll have to, obviously deal accordingly depending upon, whatever, the particular circumstances. So I just wanted to clear that up because I've had conversations with clients in the past when they'll say, well, why is this on my credit? It was charged off. It's I don't owe it anymore. Well, wrong on both counts. You still owe it. You may not owe it to them, but you're going to owe it to somebody. And the mere act of charging it off does not prevent them from reporting it. But if it's been charged off, and if they've sold it, let's say, you have a Capital One credit card and you had a $5,000 charge off and they sell that account to Portfolio, Capital One can continue to report it, but they have to report that the balance is zero. If they continue to report that balance, that is inaccurate, erroneous information, and you do have a basis in federal law, the Fair Credit Reporting Act, a basis to at least get the reporting correct. If not, get the account deleted altogether. I mean, obviously, when I see situations like that, I'm obviously trying to use that as a basis to get the entire account deleted. But sometimes, all you can do is just get get the reporting corrected. But that's better than nothing. It's better than having a credit card company report a balance and having a collection company report the balance. Okay. So I hope that clears things up. This video did run a little longer than I thought, but I think we covered some good ground. If you have any questions, please either feel free to email me, earl@restoreyourcreditllc.com, or drop a comment down below. I do read comments. I do respond to them. And hopefully you guys have a great day. Take care. See you in the next video.